Hello, let us look at the accounting equation. And the concept behind the accounting equation is that what a business owns is equivalent to what a business owes, okay? What a business owns is basically what we call assets. It's basically what we call assets. And then what a business owes, we divide it into two depending on who do they owe. If they owe the owner or the owners of the company, then this is what we call equity. If they owe a third party, then this is what we call the liabilities. The liabilities basically, let's say for example, if you go and buy from a supplier and you've not paid them, so you have to pay them eventually. If you take a loan from an institution or even your friend, that's a liabilities, okay? So I've done previous videos of what exactly is our assets, what are equities, and what we call liabilities, with also examples, so you can refer to get a deeper understanding of these, okay? So for now, know that the accounting equation is assets which are equal to the assets of a business are equal to the equity of that business plus the liabilities of that business, okay? So we want to look at equity. Let us expand what equity is made up of. And we have stockholder equity, that is the equity. If it is a company, definitely the people have some stock, so the shares. So there is that stockholder equity, and there is another aspect we call retained earnings, which forms part of the equity as well. Retained earnings. And these retained earnings are basically the profit held after use, which is the revenues that the business has generated minus the expenses the business has incurred in the process of generating these revenues, okay? So this is what makes up the retained earnings. And if there is some shareholding, then there's some payment out, because definitely when you buy some shares, you're hoping that you'll get something when they make profit. That is what we call dividends, okay? So when we have this payout, so we have to less dividends when from the retained earnings. So we look at the retained earnings that we have during a certain period, and then we decide on paying the dividends. So we usually less because it is a payout, okay? So we're going to look, how will this equation look like? We're going to have now assets is equals to, now for equity, we are going to have the stockholder equity. Now for retained, to represent retained earnings, we're going to have revenues. So we're going to have plus revenues minus expenses, okay? Then minus, that is less dividends, okay? Then we're going to remember we have the liabilities that was there, okay? So we've just expanded what we call equity, which is forming these, okay? So let's take these two on the other side of the equation, because they are less. So we're going to have dividends. When it comes on this side, it's not a minus, so it becomes plus an addition. So you're going to have dividends. Then we also bring an addition of expenses plus expenses, okay? Then plus assets, okay? Then on the other side, we're going to have liabilities plus, remember revenue is here, plus we have stockholder equity as well. So let's start with equity, and then also now revenues, okay? revenues. To remember this, we use a word called dealer. Okay, so you're going to note dealer is on the right side. So here we have, let me write this correct. So the word is dealer. So here is where the first DEA. So dividends, expenses, and then assets. And then on the other side, we have the so that is liabilities, equity, and revenues. Okay, why you need to note this? It's because the accounting equation is basically, I would say, it is the concept that brings about the double entry accounting system. And for you to be able to understand what to do when you're passing journal entries, when to debit, when to credit, then you need to be able to understand this the accounting equation concept. Okay, and when given when every time a transaction happens, there has to be a double entry. So you need to know what to credit, because you need to understand first what is increasing and what is decreasing, and on which accounts. Okay, so when you know which account you are increasing and decreasing, then you need to know when to debit and when to credit. Okay, and in this case, when you look at on the left side of the accounting equation, when we want to increase these accounts, let's say for example we have inventory that we have bought in, so our inventory is an asset account. What do? We debit that account to record an increase on that account. Okay, and when we want, maybe we've sold some of the inventory and we want to decrease it, that is to recognize a decrease in that account. What do? We credit. Okay, note that. Okay, then on the right side of the equation, it is actually the opposite. That is, if we want to, let me use another color, when we want to increase the accounts, that is, let's say if you add an account payable is a liability, then if you want to increase that account, you need to credit that account. Okay, because it is a liability account. And when you want to decrease that account payable, let's say for example you have paid that loan a certain amount during this month and you need to recognize that decrease, what you do is you debit that account. Okay, so note the difference. For these accounts, you debit to increase, but for these accounts, you actually credit to increase. Okay, so it is the opposite. And with that, you'll be able to know when to debit and when to credit an account, depending on the transaction given.